I've traveled around Australia, so you don't have to in search of the perfect property that is the best value for you in terms of returns, capital growth, and long-term uplift in your portfolio. My name is Helen Tarrant. I help everyday Australian become wealthy through investing in commercial property, and we transact all over Australia. So I can share with you, whether it's from Perth to Darwin to Tasmania to a small country town in Queensland or New South Wales, what is the best buy for you right now under $1 million. And if you're interested, I'm going to share with you where actually in 2025 you should be purchasing when you want to get the best value for money. So tune in to the end so I can share with you those final tips. Now let's get started. So you have under $1 million. So in the commercial property, that means you have somewhere between $200,000 to $300,000 in terms of a deposit. And depending on your servicing, that might get you anywhere from $800,000 to $1 million in purchase. So I'm going to share with you around Australia some of the recent acquisitions we've had here at Unicorn to help some of our clients get started. So these aren't really starter properties. So these properties usually have maybe a slightly lower yield than you would find properties that are $3 to $5 million purely because of the competition in the market. Now, you know that as part of the buyer's pyramid, that if you are at the lower end buying $500,000 to $1 million, there's lots and lots of people who can afford it, and therefore there's lots and lots of competition. So the returns actually goes down. Whereas you go further up on the hierarchy of purchase, you'll find that less and less people can afford it, and as such, you have more and more returns for your money. But if you're just starting out, you can't afford it, right? You can't afford to buy $2, $3, $4 million properties. So how do you get started? Let me share with you around Australia. Now, if you're looking to buy, let's say in Sydney, the best you can do under $1 million is probably get a little shop front or a little office space, and the yields are probably going to be about 5.5% at best. Sometimes you get 6%, but that's if you're really lucky, and you'll probably have some capital works that you have to pay for as part of the strata. So this property we got last year was a vet clinic in inner city, and it was about 6%. Yes, there's some capital works, so it probably rose to about 5.5%. But very, very reliable tenant, very sticky tenant, and a tenant that has a couple of stores around Sydney. So therefore, it was a really good buy. It was just shy of $1 million. Now, fast forward to somewhere in the ACT, in close driving distance to us. This is a little restaurant that is just in a newly developed area. Now, the yields are around that 5.7%, and is new lease to a 7 years to this tenant that already has another shop, and this is a Vietnamese restaurant. It still needs to be fitted out, but it is brand new, a lot of depreciation, and plus you actually get a very decent return in a very stable economy. So let's say, do we go down or go up? Let's go back to Adelaide, right? If we go to Adelaide right now, you're really looking for $1 million. You're probably going to find not very much warehouses in Adelaide. Most of that's going to be probably city retail properties is what you're going to be buying, or city office space, but mostly retail. Or if you want to go further out into the fringes of Adelaide, you can probably snag a freestanding just a bit above $1 million. So this property here is it's a hearing clinic, and that was transacted earlier on in the year, and this clinic it's yielding just shy of that 6.25% yield. Now, that is a hearing clinic with a very, very stable tenant. So if you're looking for that type of tenancy that is very, very stable, and of course, that gives you the longevity, these are the type of property you should be buying. But of course, that type of property means that you really need to know what you're looking for in terms of your searches. And here, of course, at Unicorn Commercial Property, we understand all of our clients individually. We create strategies for them and help them map out whether you should be buying Adelaide, ACT, or Sydney. All right, moving forward from there, let's go further down to Tassie and see what we can find. Now, this is a really interesting thing. Sometimes people think that, okay, I'm going into an area like Tassie where it's a very small limited stock, maybe I'll get higher yields. Wrong. That's not what happens, right? This group of basically this is retail office space together was a bit over $1 million, or so therefore you could probably negotiate that. Now, with that, the yields are not going to be at 7%. It's just in the 6s, unfortunately, right? So sometimes when you compare that back to the mainland, purchasing the mainland somewhere like Brisbane or even in Sydney or ACT is better. So let's go to Melbourne and see what you get. Now, Melbourne. Now, this is a property that I really, really like. It's one of my favorite properties, right? And because I think it's got that real longevity that recently that we've got two choices for our clients. Firstly, an office space, half a floor office space, bit over $1 million, right? So yeah, look, you might need to have a little bit more deposit, but bit over $1 million. This property has half a floor, already split into two, already can be split into two, meaning it's got 2 bathrooms, 2 kitchens, etc. and stuff, right? So you can easily put 2 tenants rather than 1. Tenant has renewed their lease, so they've still got 4 years to go on top of their current lease, which is finishing in about 18 months. So that's a really good buy. Plus, it was about 6.5% yield. Now, if you wanted something that's more retail because you didn't want office space in Melbourne, this was the retail little corner restaurant that's been there for 10 years, right? And they've just renewed their lease for 5 years and the yield's about a bit over 6%. So that was under $1 million, probably under 800K even. So see, these are some of the good buys you can pick up in Melbourne right now. But of course, land tax and management fees has got to be considered because it's retail leases, right? So you got to watch out. Plus, there's of course additional taxes in Melbourne, such as that the stamp duties is still 5.5%, and it's still going to take a while before stamp duty gets abolished because all of these properties are transitioned to the new system, right? So let's go to Queensland and see what we can get. What if you wanted higher yields? So maybe we should go to regional Queensland if you want higher yields. Somewhere like a Townsville, Mackay or Rockhampton. Well, there are plenty of them about. Townsville is going to be your lowest yielding properties no matter whether you're buying retail, office space or warehouse. A lot of people go to Townsville to buy warehouses, except the yields now are about 6.5 to 6.7% yield, especially around that mill range, and there's hardly any stock. So recently, of course, the ones that we've seen are in areas in Mackay where you can hitting a 7%. In Rocky, you can get 7 to 7.5%. These are the ones in regional where you want to go if you're looking for returns. However, if you're not looking for returns and capital growth is more important, then you should definitely think about Brisbane and the area surrounding Brisbane. So Brisbane, Ipswich areas, Brisbane towards the Gold Coast, Brisbane towards the Sunshine Coast, all of those areas. But watch out for Gold Coast and Sunshine Coast because they're very, very low yields, around that 5.5% or even 5% if you're looking for industrial property. So small warehouse, around the $700,000-$800,000 mark. We just snagged that for about 6% this year. And plus that right now, if you do looking for something around that mil, 800 to 1.2 is really something you want to be looking for. And you probably will get something around 5.8% in terms of industrial in Brisbane. Now, industrial's really had a boom, so do watch out that you're not overpaying for it and you might not get capital growth in the future, but you know, you can still buy something around the $1 million mark as well. So going towards Ipswich, you might get a little bit higher yield. Going towards Gold Coast, Sunshine Coast, it might be a little bit sharper. But ultimately, Brisbane and Queensland still gives you the best kind of returns. Now, you might be thinking, well, I haven't really covered Perth and I haven't really covered Darwin. Well, I've got heaps of clients in Darwin, but I just don't invest in Darwin. And the reason I don't invest in Darwin is that the little pockets, there's a little pockets of commercial property, and most of my Darwin clients I want to invest out because there's a lot of social unrest there. The economy is not so brilliant, doesn't have a huge amount of support. You can get massive yields. So if you want your 10%, definitely you can go to Darwin, places like Alice, places in like further out regional Adelaide, but you're going to have a huge amount of risk and have potentially a huge amount of vacancies as well, right? So that's why we don't really do Darwin, but we have looked at properties there and we have heaps of clients there as well. Remember, we do transact all across Australia. We are specialist buyers agents in commercial property. We only do commercial property. So Helen Tarrant, the unicorn team, only does commercial property. That means we understand it inside out, and we don't take from what's in resi and bring it into commercial and pull the wool over your eyes and go, oh, this is a good deal, when really in the commercial world it isn't. So that's why you should check us out and book in for our free blueprint session, because there we can actually help you craft all of this into a personalized strategy for you, so you know how to build that portfolio in commercial to give you all the things you want, which is cash flow, growth and uplift, right? And that's part of our proprietary system. But let's go to Perth, right? What do you get in Perth? So if you go into regional Perth, which is Mildura area, or you go to Perth Fringe, which really is not advisable, right? But if you go to Joondalup and stuff like that, your warehouses are going to sit somewhere about 5.6 and 5.8%. Sometimes you get 6.1. However, that means that you really are getting your Brisbane yields in Perth. And why would you get your Brisbane yield in Perth, right? Remember, Perth is still a big mining town where somewhere like Brisbane has a huge amount of upcoming growth as well. So if you're comparing yields to yields like we do here professionally in Unicorn, you want to be sticking to the areas that has a good back end growth for you, which is going to Brisbane, taking the same returns, but knowing that you've got a lot more in the back end. Where do you get in Perth City? Well, Perth City, if you go for a retail, you're probably in that 6 to 6.5. So it is sitting a little bit above Brisbane, but always consider that extra 0.5% you're getting in cash flow may actually mean you get a 1% less in capital growth in the back end. So for me, it's all about having the return investment overall look. And that's what we teach you, and that's what we show you, and that's what we present to you as a buyer's agent here at Unicorn Commercial Property. If you enjoyed all of this, please give me a thumbs up. Please subscribe, hit the bell, but also engage with me. Ask me questions about the areas you want down below, right? Say you've got a particular area. It doesn't matter where it is. It could be Alice. It could be some obscure place, right? And it could be Emerald, anywhere. Just put a comment below and I'll tell you what the returns are, whether you should be buying in that area as well, because I travel literally all around Australia. And of course, my final tip, what you're looking for if you're buying in 2025, best value for money you need to consider is what you want to do in 3 years' time from this property, or even in 2 years' time. If your value is that you want to refinance and go again, you need to concentrate more on growth, which means you want to stick as close to the metro areas as much as you can. Melbourne, ACT, Brisbane are your focuses. If you're chasing cash flow, you've got plenty of growth because you just can't access your equity, then you need to stick to your regional areas, but stick to your large regional areas because that's what the bank likes. So regional Queensland, regional Victoria, regional New South Wales. Look at properties that are in towns over 50,000 people. So none of your Romas and your Chinchillas, none of your Junies. Stick to Albury, Wodongas, Waggas, Warrnables, and stick to your Townsville, Rocky, and Mackay's, right? So make sure that you do adhere to those if you want to keep growing your portfolio. My name is Helen Tarrant, and I help everyday Australians become wealthy through commercial property, and I want to do the same with you as well. So book in for that free strategy session.